Hello, everyone. So today we are talking about investing, and today's topic is: Are you guessing or are you investing? And the topic was inspired by a few conversations that I've had with a few women over the last few months when it comes to investing, with everything going on with the stock market, with the tariffs, and things like that. So many people are panicking, they are panic selling, or they just stopped investing altogether. And I have found that when people don't truly understand what they are doing, they get distracted or deterred very easily. And so I want to talk about how we need to kind of elevate as investors and really start taking it seriously. And we need to stop guessing and start investing. Now, I have spoken to hundreds of women over the last, I guess, 6 years since I've been doing this. And it has always been very amazing to hear, or shocking, I should say, to hear how many women who are actively investing, but they're really just winging it. They're throwing money into this 401k, they're throwing money into this IRA, and they are literally like fingers crossed and trying to hope for the best. Now, I understand where they are all coming from, right? Most of us didn't learn about investing in school, whether it's high school, college. And so once we moved into adulthood, we're learning on the fly. And so, unless you've taken action to learn about investing, it's not coming to you naturally, right? There's no osmosis of a way of learning. You have to either learn by reading books, taking courses, or just learning from experience. And so, we need to kind of go from there to the next level. And what I mean by that is being more educated and being more proactive when it comes to investing. And so I'm going to give 3 tips to help you elevate yourself in your investing journey so you can stop guessing and winging it and move towards investing strategically and in a way that is more proactive. And so when it comes to investing, I've said this many times, again, I'll say it more in the future. Investing can be as simple or as complicated as you want or need it to be. You don't have to understand fancy charts. You don't have to spend hours upon hours doing research. But what you need to do is have some kind of way to do simple research at a bare minimum before you make an investment. And this is what I call the bare bone minimum you need to attempt to learn. So that way you are making decisions based on your educated guess versus you're winging it and leaving it up to happenstance. Now, the first thing I always talk about in all of my courses, any of my one on one programs, I always focus on mindset. And some people are kind of surprised by that. They kind of want to jump right into the meat and potatoes of the right. But your mindset really dictates everything. It's going to determine whether you are going to be successful or not at investing. It's going to determine how you approach investing. And more importantly, it's going to dictate how you navigate through the tough times, right? Investing is exciting and fun when things are good. But when you experience what we're kind of going through right now, when you have these downturns, the market isn't doing well, maybe your finances aren't doing well either, this is when you are truly tested as an investor. And so this is why I always focus on mindset, because it's really going to be what sets you apart from being a good investor to being a fly by night kind of investor. And so this is why I do focus on mindset a lot. And it applies to investing in pretty much every part of your financial house and financial journey, which is why I always focus on it first. And so when it comes to investing, we kind of have to move away from the consumer mindset and shift more towards an investor mindset. Now, when I talk about having an investor mindset, that doesn't only mean investing in the stock market, right? When it comes to investing, it can look different for you in different seasons. It'll look different for you versus for me, right? There's different ways to go about it. But at the crux of it all, it just means we're focused on improving something, whether we are looking to improve our finances, We're looking to improve our skill sets. We're looking to improve the assets that we own. You are looking to add value to your overall life or to your overall net worth. And that is what I mean by having an investor mindset. So, for example, let's say right now, you are unable to invest in the stock market for whatever reason. Maybe you need to invest in yourself, right? Maybe you need to invest in a course, a program, a book, or spend time reading more or going to more networking events to be around other people who you can learn from, right? There's different ways to invest in yourself. Maybe you need to invest in your appearance. Maybe do a makeover, right? There's ways to invest in yourself, whether it's your mind, your body, or your soul, essentially, right? And so we have to move away from being consumers, meaning we're spending money on things that don't add value to our lives, and we are buying more liability. So one good example is, as we know, every single year there's a new iPhone, there's a new Samsung, like clockwork every single year. Now, there are people who literally go out to buy this new cell phone every single year, like clockwork. Now, when these phones were only a few $100s or free, depending upon, right, the rebate, maybe that wasn't a horrible thing to do. It was more affordable. But now cell phones are well over $1,000 when you're buying them brand new. So, do you really need to buy a new cell phone every single year? For most people, the answer is going to be no. But everyone, not everyone, but people tend to gravitate towards the fancy, shiny things. They want the newest thing. They want to look cool amongst their friends, their coworkers, their peers. So they go out and they purchase these liabilities. And to make matters even worse, they are financing these liabilities, right? Most people on average aren't spending or dropping 1,000 or $1,500 on a cell phone. They're doing a payment plan. So they're spending anywhere from 40 to 60 bucks every single month to pay off this liability that isn't adding value to their life. It's not adding to their portfolio, and they didn't really need it. But this kind of goes, this all kind of goes to the same thought process of needs versus wants, consumer mindset versus investor mindset. And so, if you are serious about elevating as an investor, your mindset is the first thing you need to do. Now, I'm not saying to give up all of the things you love and all the things you like to do. I'm not saying you have to go bare bones on everything. I'm not saying that. But what I am saying is instead of running out to buy things first, maybe try to pay yourself first. And I know that sounds so cliche because all these finance gurus, including myself, we say this, but it's really true, right? So you need to make yourself your number one priority when it comes to your finances and when it comes to your health. But we'll leave the health conversation for a different day. But instead of running off to pay your bills first, which they need to get paid, I get that. You need to pay yourself. Future you needs today you to start thinking about that, right? No one, like I've said before, no one's coming to save you, no one's coming to save me. So you have to be able to save and protect future you. And one great way to do that is to start taking investing more seriously in whatever shape or fashion that looks for you. Now, I do recommend, investing in courses and programs or ebooks and things like that. And one book that I recommend that every single person should read, whether you are new to investing or have been doing it for a long time, is The Psychology of Money. And this book has so many lessons in it. But one of the biggest lessons in this book is how much money you make doesn't always dictate how successful you will be as an investor. You can make a couple of $100,000 worth of salary every year and still be negative and still not have any money versus someone who might be making half of that or less. And if they're just investing small increments and doing it consistently and they're building their portfolio, they're more than likely to see long-term success versus the person who makes a lot more money. It's not always about how much money you make. It's a lot of times about how much money you can keep. Right? So this is why we try to live below our means, and that's all relative too. But the biggest thing is we can't Move from a place of saying, well, I need to wait till I'm making more money. I need to wait for this thing to happen in the future to start investing. We need to start where we are right now and do what we can with what we have. And that, if you shift to that mindset, it will be game changing in how your finances play out. And it also will show in your portfolio, right? Investing no money for a long period of time does nothing, versus investing a small amount of money over a long period of time that can actually help you out a lot in the long run. But I think for a lot of people, they take for granted that putting a small amount of money away is going to even be worth it. Is it really going to matter? It's not going to move the needle. So instead of taking that $25 and putting it in an IRA, they'd rather take that money and buy something from Shein or Temu or Amazon, right? And I get it, because $25 by itself really isn't life changing. It's not, again, moving the needle, but $25 consistently over a long period of time will eventually add up to hundreds of dollars and then thousands of dollars. And then if you're investing it, now your money has more opportunity to grow. So you really need to not take for granted the power of starting small and doing more as you can do more. Don't wait for that one day to make more to start. Meet yourself where you are today and then just get started. Now, the second thing that can help you shift from guessing to being more strategic when it comes to investing is getting control of your emotions. Now, again, some people might think, well, what do my emotions have anything to do with this? Your emotions and your mindset really kind of go hand in hand, right? So, your emotions really will also dictate how you approach investing. And here's an example. So, the stock market took a big hit in the last 4 months. And so, if you were triggered by that, you may have started to panic sell, and you may have stopped investing altogether because you lost money in the last, 4 to 5 months. So now we are seeing, well, fast forward to now, we're seeing the market is rebounding, but now you aren't seeing the benefit of that because you took all of your money out of the market because you were panicking 2 to 3 months ago, right? And so, one way to be in control of your emotions is to educate yourself. The more you can learn about investing and understand the ebbs and the flows, and also understand how to do some research before you invest in a company. Now, it's not going to guarantee that you're going to make great investments, it's not going to do that. But what it will do is give you more confidence as you are making your investment decisions. And the confidence piece is key to being successful as an investor, versus the opposite, where you're very uncertain, you're not sure, you're really guessing. And when you're guessing and uncertain, it won't take much to make you freak out. It won't take much to make you panic. And this is where panic selling comes into play, right? The sky is falling, the market's losing money. You're like, oh my goodness, let me sell now so I don't lose any additional money, right? So that's kind of what you did. But then when the market kind of bounces back, you're like, oh man, it's bouncing back and now things are becoming more expensive when I could have bought them cheaper, or I already had bought those stocks at a cheaper price, but now they're more expensive because the market is rebounding, right? So if you are investing from a place of confidence and being more proactive in your approach, it tends to help you in the long run. And it's more difficult to make you panic sell and start doing a lot of things because you know what you're doing and you have more confidence in what you're doing as well. So this is where the education piece really comes into play. Now, that leads me into my third point, which is you have to just start. I know that probably sounds so basic, but you'd be surprised at how many people are using or are a victim of analysis paralysis. And that is why they haven't started investing, right? They're waiting for some magical day in the future to when they have more money. They're waiting until they will know more, but they also aren't doing anything to learn more. They're waiting for something, right? Some event to happen before they start. And with all of that being their reason why, They don't start and then they're not making any money in the market, right? So a body in motion stays in motion. So the sooner you can start, the better it will be for you in the long run. And truthfully, you don't have to have all of the answers to get started, right? All you need is to know what your budget's going to be, like how much money will you put aside every week, every month, every pay period, whatever works for you. And then from there, what will you invest in? For most people, they will start with investing in the companies that they know and use. And that is a great place to start, right? You never should invest in something you don't understand. So if you know you're using, let's say, Apple and you love your iPhone, that could be a great place to start. If you use Amazon, right? There's companies you use in your everyday life. You hear about them a lot, whether it's you using them personally or you know people who use them. That is a great place to start because these are companies that you know what they do, you know where they're located, and you can easily research these companies as well. So this is what I mean by not letting analysis paralysis stop you from getting started, because that day that you have in your head that's magically going to come may never come, right? So instead of trying to wait for things to be in alignment, just start. And again, you can start small. You don't have to put thousands of dollars into the market to get started. You can start with just $10, $20, $100, or you don't have to break the bank to get started. And truthfully, when you are starting out, and starting small might be better until you gain the knowledge, feel more confident, then you can invest more in the market. That's another great way to approach it. So at least that way you're doing something versus doing nothing at all. So we really have to also meet ourselves where we are when it comes to investing. We're all juggling multiple goals and agendas, right? Whether you're working on your health and fitness, you have your career, you have children, you're working on relationships, whether you're married or trying to get married. We're juggling so many things at the same time. So I definitely get it. If investing isn't your number one priority right now, but it needs to move up further on the priority list, because again, future you needs today you to get started. So you don't have to start courses and programs right away. You can do something as simple as reading a book. I so happen to have an ebook. It's called Stock Market Investing for Beginners. I will put a link to the book in the caption of this video once I post it. And in this ebook, I do teach you about investing, and I do break it down in a way that's very simple and very easy to understand. And that is the other piece about investing. People tend to feel intimidated by it. They feel overwhelmed by it. And so that's why they also don't start, because it's too much. And you're right to feel that way, because I get it, but you can't sit in a place of ignorance forever, right? At some point, you have to get started or you are going to get left behind, right? The market's going to move with or without you. So you need to, it would be in your best interest to be in the market. So when the market increases, you're going to see the benefit of that as well. But if you're not in it, there's no money that's being made. And then again, you're just getting left behind. And so too many of us in the Black and brown communities, we're getting left behind because we didn't learn about investing as kids. We didn't learn it as adults either. And now we're kind of starting late in the game, which is fine, right? It's better to start than not at all. But we can't continue to sit in that place of ignorance, especially if we're trying to build generational wealth, right? When it comes to generational wealth, it can't just be the things you're passing down. You must also pass down the knowledge, right? Teaching your kids about money and investing and how to, grow their investments and how to think about money and how to manage money, how to work on their credit, right? These are the things we need to teach our children. But if we ourselves don't know it, we can't pass on the knowledge to them either. And so then they're starting also from behind the eight ball because they didn't learn it as kids, or they might not learn it as adults either. So it really kind of all goes hand in hand with the whole generational wealth conversation. We must pass down assets, but also pass down knowledge, because the knowledge will help your children and beneficiaries navigate and manage those things they're going to acquire. And we've seen it. There have been many stories. You might know someone personally who they came into a lot of money because of someone passing away. And in a short period of time, that money came and that money went quickly. And so that all comes down to the lack of knowledge and lack of financial literacy. It also, in some cases, is a lack of estate planning, but we'll park that for another conversation on a future day because estate planning also is a big part of generational wealth as well. So, just to do a quick recap, if you are serious about investing and that is one of your top goals for this year, the three things you need to do as soon as possible is one, focus on improving and shifting your mindset. You must move from being a consumer to being an investor and meet yourself wherever you are in this season, right? In this season, it might mean investing in yourself. It might mean investing in your business. It might mean investing in a course or a program, or it could be investing in the stock market or acquiring an asset, or it could be a combination of all of those things. But you must make that a priority if you're serious about investing and building wealth. The second thing you need to do is work on controlling your emotions. And this one is more tricky, right? When it comes to money, it can be a very vulnerable and sensitive topic. And I totally get that. Plus, on top of that, the economy we're in right now and the current administration, there's layers to what's going on right now. But the more you can learn and educate yourself, it will help you regulate those emotions so you're not panicking when things kind of go bad temporarily. Because again, nothing lasts forever. When the market's up, that doesn't last forever. When the market is down, that won't last forever either. It's really about how to ride the wave in a way that's going to help you increase your net worth over the long term. And the third thing is you have to start learning. You have to start. And I know this also is difficult because you might not know where to start. You might not feel as though you have the time to learn. I know that's definitely an issue that many people have. But again, no one's coming to hand you the information, and also no one's coming to save you. So, what can you do this year, this month to help you start learning in baby steps? You don't have to learn every single thing in a day, in a week, or a month, but you can start learning little things here and there. And a great way to learn also is just by doing, by putting money in the market, and you see what happens, and you'll start to notice patterns. You start to notice, what investments you like, what investments you don't like, what investments are doing well, what investments are not doing well. So part of the learning is hands-on. It is the hands-on learning and being part of the market when it's up and when it's down. Right? We saw how much the markets were up during COVID and people were riding the waves. Everyone felt they were an investing expert until the market tanked. Then investing became less sexy. Investing became less of a hot topic because people were losing money who never truly understood investing in the first place. And so, this is what I mean when I say we have to be proactive and strategic. And the more you can learn, these ups and downs will be less detrimental to you because you know what's happening. You'll know what to do. You'll know how to respond, and they won't shake you from your ultimate goal. So these are the three things I do recommend that you start. Again, I do have my ebook listed in the caption down below. It's called Stock Market Investing for Beginners. Now, in this ebook, the whole goal of this book is to teach you different investing terminology so you can start to understand what's going on when you're listening to the news or when you're looking at your 401k or your IRA. I also begin to show you how to create your own investor checklist. Now, with an investor checklist, it's just really 3 or 4 things or 3 to 5 things you're looking at to understand whether or not you should invest in a particular stock or index fund. Now, I always correlate this to going for a job or applying for a job. When you are looking for a job, well, no one's handing you the job, right? No one says, "Hey, Emily, here's a job. We think you're great." No, they put you through a vetting process, right? So they take your resume, they take your application, then they do a phone screen with HR, right? Then you'll move on to a few rounds of interviews. If you pass that vibe check, then you will move on to background checks, references, maybe credit checks. And once you've completed all of those steps, then you receive the job offer because now they have vetted you as a candidate. So you can approach investing in a very similar fashion. And here's what I mean by that. So you're going to kind of say to yourself, well, there are 3 to 5 things that I care about as an investor. Some examples are you care about whether they pay dividends or not. You care about how much money or how much cash they have on their balance sheet. You care about how their revenue has performed in the last 3 to 5 years. You might care about earnings per share, right? There are certain metrics that over time you will begin to say or learn, these are important to me. And so what's going to happen is when you have these 3 to 5 things you're looking for, it's literally like a little checklist in your mind or on a piece of paper. And so when you're looking at this particular stock, you'll say, oh, do they pay dividends? Yes or no? Do they have enough cash in their balance sheet? Yes. Right. And you're kind of just checking off your list. And that could be mentally or on a piece of paper, like I just said. And if they meet your requirement, then you're like, sure, I'll invest. They don't meet your requirement, it could be, you know what, it's a no for me. Or it could just be, I want to invest, but not right now. And that's fine too. And so this is why having this checklist is super important because it will help make investing a lot easier for you. And then as time goes on, your checklist will change as you become more sophisticated as an investor or as your needs and wants change as an investor, your checklist will change also. But what's great about it is it can take off the mental load of trying to figure this out because you know what's important to you. And once you find the things on your list, it makes it an easy yes, no, or not right now. Just that simple. So whether you buy the ebook or not, you should be working on creating an investor checklist. But the ebook does give you a head start in helping you create one. So that way you have it. And now that will make your investing journey a little bit easier. But the biggest thing is educating yourself to then understand what should even be on your checklist. And that's the main thing you want to focus on as well. So that's it for tonight's live, guys. I'll talk to all of you on Friday for our weekly recap. Take care.